Now, let's talk more about the fixed income market as well as the Forex market. We're going to analyze how the market started this week, starting with where we had the inflation numbers coming out. We also had the Treasury bills auction carried out this week, as well as some other activities. So we'll take a look at that, as well as some other factors to consider within the market, even up to next week. But let's start with a review of this week, and we have Nonso Ifejiofor to give us details of that. Nonso Ifejiofor is a fixed income dealer with Access Bank to give us details about that. Thank you for joining us, Nonso.
Okay, good afternoon. Thank you so much for having me.
Okay.
So I'll just start from where we are seeing liquidity at the start of the week. As you are all aware, markets is currently in the repo of 1 trillion. Today is currently at 1.5 trillion. And basically, it's always the liquidity that sets the tone for some of the things that we see in the market. For the FX market, what we had seen was the market that traded around the 1550 levels. However, we had seen an appreciation. The NAFEX as at today, as at close of business yesterday, basically was around the 1541 level. And also we had seen the CBN MFM rates print at around the 1536 levels. Just like you rightly mentioned, there was a NCB auction based on the updated calendar of the DMO. At that auction, the CBN had offered 800 billion. However, subscriptions stood at about 900 billion. The CBN sold around 503 billion. That is, they sold less than what they had offered, and we had seen the discount rates on the long term inch up to that's the 364-day paper inch up to the 19.94% levels. This increase in rates has brought about some bullish momentum, which we have seen between yesterday and today. And we believe that this will be driving the market further, even as we expect coupon payments next week and some bond maturities.
Okay, so also let's talk more about the FX market. I know the fixed income is actually your forte, but let's talk a bit about, because it has something to do with this market. Now, we saw that first rebound on the Forex reserves level coming after 9 weeks of decline. But so far this week, how is the Forex market transaction as well as the current level of the reserves?
Okay, so I would like to just give a bit of context as to what we have seen happening in the reserves. As at December, the reserves was at $41 billion. Was at 6th of January, we had seen it at $39 billion. And now we are at $38 billion level. The movement in the reserves is not a surprise to market parties, basically, because the CBN has stated that they will be restructuring their balance sheets. If you recall, they have started paying down on some of the CBN swap maturities with Nigerian banks. And then some of the things that we saw in January and February play out was that most FPIs had stayed on the sideline, basically watching us to see what would become of the MPC meeting. And now the results are out. The inflation numbers are also out, and the market is not trading with a bit of confidence. The CBN had also had to intervene more in the markets, basically in January and February, which caused the decline that we saw in that reserves. However, what we have seen is that we've seen improved interest from both the FPIs and also from local participants to bring the green back to the markets and increase supply. So the pressure we had seen earlier in the year had sort of subsided, and that has brought about the accretion that we've started seeing in the past few days.
Quite interesting. Okay, so now tell us more about what to expect, what investors are to expect, because we know some of them may want to pull out maybe from the equities market, which has been on the downside, and maybe possibly coming to the fixed income market. So next week, there's going to be a bond market. That's going to be the final week of March. What are investors and the market to expect in the coming week?
Yes. the fixed income market is a good place to play in currently. We know there will be two auctions next week. The bond auction, the CBN, the DMO had offered 300 billion, 200 billion on the 2033s and 100 billion on the 2029. On the back of that, we will also have another auction to follow on Wednesday. The DMO will also be issuing about 700 billion worth of papers. What we see going into next week is that for the bond auction, since there will be a maturity on that same day, maturity of about 600 billion, the expectation is that this would most likely be a refinancing, and we expect to see a huge amount of subscription from that auction. And we also expect to see rates hovering around the 20 levels. For the NCB space, just like we have seen from this week, the long end from the auction closed at around 19.94%. We expect to see that same momentum going into next week. And then we also expect a maturity of about 1.2 trillion on Thursday. We have a 600 billion maturity from the bond on Monday. We have coupons coming into the system of about 163 billion. So by next week, we're expecting a liquidity of about 1.9 trillion. We believe that all these factors put together would boost the war chest of investors to come to those auctions. And with that in mind, we expect rates to stay over around the 90% to 2%. And at this point where the rates are currently, it provides a positive return when you look at where the inflation numbers are printed at 23.18. So it's a positive carry for investors, and it will be a good place to come into and then and invest and seek and maximize returns. Thank you.
Also, thank you so much. I'm sure investors will be very, very keen on the upcoming FGen bond auction, which will be for the month of March, because that is always oversubscribed. But thank you so much for your time on the show. I look forward to the expectations for next week.
Thank you.